Brent with another chart breakdown for trade therapy. Today is Monday, June 2nd, just after market close, about 1:45 Pacific time. But we're talking about Apple. Apple was our clarity spotlight last week. In that article, we talked about structural rotation. We talked about profit taking. We talked about this rotation that most traders missed entirely, something that we've been keeping an eye on for a very long time. We've been looking for profit taking and reaccumulation in the mega cap tech space since late last summer, and we're seeing it now. A lot of the traders missed this. The headlines were really loud, option flow were heavy and panicked, but the charts told a different story. So let's walk through it. Let's walk through the institutional setup chart by chart, beginning with this weekly chart from February of this year. At the time, Apple had just completed this upthrust after distribution. This is a Wyckoff term. It refers to this upthrust after this long period of sideways action right here, which is profit taking. This is how institutions take profit at the top, and to unload the last bit of their position, they'll push price up above it. They'll draw in retail chasers chasing the breakout, confusing it for strength. It's very easy to confuse these upthrust after distribution for strength. But the low volume, as it breaks out above these previous highs, you can see volume actually goes down. That is a textbook sign of profit taking. You can see this low volume evening star candle right here, classic distribution or signs of distribution. This was an immediate rejection and falling back down into the range, into this previous price range, and volume rising as it does. Volumes muted as it pushed higher, and then increases as price pushed down into the range. That is clearly distribution. That is clearly profit taking. And that kicked a multi-month process that played out throughout Q1. Most traders saw this as weakness. A lot of the retail community believed that the mega cap tech space was going to go into a deep correction. We had been tracking this and identified the mega cap space as a target for reaccumulation for quite some time. And so we had a little different take on this. And if we jump over to the monthly chart from May, you'll see that confirmed in the price action here, because in April, something changed. Whenever you see a long shadow like this on a monthly candle on higher volume, that's a sign of accumulation. That's a sign of a major institutional flow coming in and absorbing supply as price flushed down below this previous range. That should have triggered an ongoing continuation or an ongoing trend down, but instead of expanding lower, we saw immediate absorption. Price stabilized here on big volume. That volume isn't panic selling. That's demand stepping in. Critical and structural signature of reaccumulation. We pointed out in the article that the clue is volume at the lows. If you're seeing higher volume at the lows, if you're seeing lower volume at the highs and on breakouts, that is a telltale sign of reaccumulation. They are taking profit at the top and they are buying up the lows. While the media stayed focused on Mag 7 fragility and talking about a breakdown in the mega caps tech sector, we were keeping our eyes on what big money was doing, and they were shifting gears and they gobbled up this weakness, took advantage of all of the tariff scares and gobbled it up quickly. If we take a look at a weekly chart, we zoom in a little closer here, we see a very well-defined reaccumulation range right here. We see tightening price action after this big dramatic drop right here's the volume coming in strong at the bottom. We see volume contracting as price came down. That's another clue that this is not distribution. When we see a trend, an early trend or early distribution, we expect to see rising volumes as price drops. We didn't, we got lower volume, and then absorption and accumulation started coming in here. That's because institutions don't chase, they don't buy headlines. Institutions build positions during fear. They absorb supply quietly. They let the headlines scare people out of their positions and then gobble them up as they rebuild their positions. It's very healthy for the long-term trend. Charts like Apple, the mega cap tech space, Mag 7, institutions have to be able to take profits, reload their positions to keep the longer term trend going. And so keep that in mind when you see these reaccumulation periods. These periods can be really scary to go through because the headlines are very scary, but reality is this is normal price behavior. It's very healthy for the overall market and for Apple itself. Having said all of that, this reaction rally into the end of April has left this inefficient range right here. And we see as price kind of stabilized right here, it has not been able to retake any of these weekly moving averages right here. So we do expect to see a backtest of demand before institutions fully commit to the long side of the trade. They want to make sure that there's no more larger players committed to the short side of the trade. So they will backtest to see if additional supply gets brought into the market that they will have to absorb. Assuming that does not happen, we'll expect to see probably 50% of this candle be covered right here, right around 188. That's the targets that we're looking for in our trades, or potentially coming down and tapping the 200 weekly exponential moving average again. We'll see. The key is to not confuse this short-term volatility that we may see here with trend failure. If we see high volume and we see it break down below this and there's big selling volume, that means the back test failed. And that means that there is still institutions that are committed to the short side of the trade, and it'll just take longer for that supply to be absorbed. If you want to stay on the right side of these moves, forget the headlines. Focus on the structure, focus on the volume, and on the institutional business cycle. That's what we do every week in Clarity. We cut through the noise and follow the actual positioning. So you can read the full breakdown of Apple and our top-down analysis on our site right now. I'm Brent with Trade Therapy. We'll see you next week.